Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking S&P futures. So a low volatility week for the most part. I mean, we had some decent moves, continued low volatility on the day that everybody's been waiting for. Janet Yellen gave her speech this morning and was rather dovish. Traders that were looking for hawkish comments out of Janet Yellen really didn't get them. I mean, she was basically even. One of the things that came out of it from terms of a volatility perspective was she talked about slowing down. I'm paraphrasing, of course, but she talked about slowing down deregulation. She said that we shouldn't abandon the regulations that were put in place 2008, 2009. And she said that it should be done a lot more cautiously, and most of them should probably remain. Again, I'm paraphrasing. So there was a lot of speculation that these were the kind of comments that were going to allow a situation where she would not be reappointed. So the market kind of took that with a tone of volatility, but the S&P still finished only slightly higher. NASDAQ was the weakest of the three, and the S&P was the strongest. And again, S&P finished only slightly higher, what I would call unchanged. This is another Friday with essentially an unchanged S&P 500. Robert Kaplan, on the other hand, Dallas Fed's president, had a great interview this morning, and he was extremely thoughtful and extremely thorough and extremely clear in where he thought the Fed was in terms of removing accommodation or leaving it in place. One of the things that struck me that I thought was important for the S&P, for the markets in general, was he said he doesn't just look at prices in terms of determining whether something is overpriced or even a bubble. Again, I'm paraphrasing. But he looks at a relationship of growing debt to those assets. And he's not seeing that right now. He's not seeing it in housing, and he's not seeing it in equities. So while they may be overpriced, he doesn't see risk to the system, so to speak. And he thinks the banking sector is a lot stronger than it was prior to the crisis. But it was an interesting correlation, something to look at, whether debt was growing relative to the assets that are priced in the money that may come from that debt. And he says it's not. I haven't looked at it, but it was a really thoughtful, provocative conversation, and the kind of conversation that I think should be had. Also, we had Mario Draghi, who the ECB president really left the market wanting more. He didn't say much. He talked about protectionism. He said the global economy is heating up, but just like Janet Yellen, didn't really address monetary policy, and the market was hoping for more out of him, but not expecting it. So we didn't get the Jackson Hole volatility that a lot of people were expecting. This is Bob Iaccino talking S&P from the CME Group trading floor in Chicago.